To the week, folks. I'm calling NVIDIA the stock that's going to lead the parade, right? They finally broke out. It's the king of the chips, but let's be honest, it's mostly been a bystander. You think about the monster semiconductor rally we've had now, but I think it's cheap. In fact, it is cheaper than it's ever been versus its own rivals. By the way, my next guest, she likes the stock as well. I'm going to bring it now. ER Shares COO, Eva Ados. And Eva, let's just talk about one of the reasons you like it is the revenue per share.
Yes, we're looking at this statistic across the board. For example, to put it into perspective, the S&P 500 average on a revenue per employee basis is $650,000 per employee. When it comes to NVIDIA, that number is 5 million per employee. This is an amazing productivity number. You can see the effects of AI here. This is a company that increased its headcount by 60% in the last 3 years. At the same time, though, the revenues went up 8 times. So you can see they're increasing the headcount much lower than how the revenues are coming up. So this is a great statistic to look for.
This is your new favorite, Astera Labs,
yes.
ALABY.
It is the new favorite. It's not a household name yet. I think it should be for many reasons. First of all, anytime a hyperscaler invests in AI CapEx, Astera Labs gets paid first. They create the chips, the connectivity chips inside the racks. This is an infrastructure play, AI infrastructure play, 150% revenue growth. This is a company that's growing its margins. And again, if you look at the productivity rate, revenue per employee, that's 1.6 million.
Palantir is a name that you like also. Palantir is struggling. It's caught up in the software thing. You can see it peaked in November, and it's just sort of drifted despite coming out with earnings after earnings that are pretty impressive.
Yes, it is impressive. It's the name everyone wants to debate. We like it here. We actually like the product. Again, productivity metric here is 1.5 million per employee in revenue. This is, again, a company that's growing its operating margin from 37% to 47%. This is extraordinary for a company to increase its operating margin with this rate in a year.
All right. I'm going to skip AppLovin because I know you still love AppLovin. I got to ask you about this new IPO, this Cerebras, right? Just this morning, they raised it to $150 to $160 a share. They're going to raise all this money. It's 20 times oversubscribed. I think this week begins the IPO season. You have a big chunk of SpaceX in there. Does this change your expectations for what can happen with SpaceX?
No, it makes us more excited. We believe, we have a very strong conviction. That's why it's our number one weight. We have 230 million in our XOV ETF of SpaceX exposure. And we see more IPOs now. I think people are rushing to IPO because SpaceX is going to get all the attention. It's going to get all the risk capital out there. So whoever makes it before that is to their benefit. But we believe that's going to be by far the biggest IPO in history, certainly in the US and also probably in the world too. You
know, CoreWeave was an AI-associated IPO last year. It got off shaky, but it's got a lot of momentum. It feels like these are certain niches that it's just, I mean, I hate to say it for sounding corny, but the sky seems to be the limit right now.
It does, but to us, SpaceX is going to be different. This is a long-term hold for us. We use the VC lens when we invest in the public markets, and SpaceX to us is going to be a long-term hold. We think this is going to be the elite Magnificent Eight. It's going to outperform all the competition out there when it comes to space companies.
So this is the stock people can buy even once they IPO, no matter what. You should be buying and holding this.
Buying and hold.
All right, Ava, thank you so much.